conversation forward. We've got Peter Cardillo joining in the show right now. Peter, hi, morning. Great to have you on the show. It's a fresh take from Trump overnight, and he's slapping a 100% tariff now on patented pharma, Peter. Does it seem like it's going to get a lot worse when it comes to tariff announcements before things iron out?
Well, it wasn't a surprise. Trump has been saying this all along, that tariffs on pharmaceuticals were on their way. I guess he extended it somewhat, and for a while there we had a break, and now we're back on the tariff situation. And so I think so. This is going to prompt exporters of pharmaceuticals to raise their voice, and their governments are likely to bark back at the United States. And of course, this will go on like it has. And then eventually, I think these levels will come down. Look, 100% tariffs on a product is absolutely ridiculous, and the manufacturer would have to shut down. So, these are just scare tactics that bring the interested parties to the table to negotiate.
Well, yes. Hi, Peter. This is Shrishti also joining in. So that's with respect to the tariff, and especially the pharma tariffs will be in focus. But along with that, IT is going to be another sector to be watching out for. We just heard and saw the earnings coming in from Accenture. Help us understand, how do you read into the numbers of these traditional IT companies, if you have any take, because the tech boom is there indeed in the US markets. One side, it's the AI companies that are doing very well, but on the other side, how do you see the spends for the traditional IT companies panning out?
Well, I really can't talk about individual sectors or individual stocks, but I can tell you this, that there's been a lot of money that's been thrown to the artificial intelligence sector, and it looks like it's probably going to continue. So, it's it has been the new game in town, and investors seem to have quite a large appetite for artificial intelligence.
All right. Along with that, Peter, if you can give us some broad sense with respect to what are you picking up with respect to the U.S. markets in particular, because it's the third straight day of selling that we have seen on the benchmark indices. Some of these tech companies continue to do well. And just yesterday, we had seen that revision coming in for the Q2 GDP, but the interest rate trajectory is something that the markets are watching out for. How do you think that the markets will be taking cues from all of this?
Well, as far as the GDP numbers, they were very strong, much stronger than we expected, the final revision. But let's take into consideration that that's what happened in the second quarter. That's old news. And let's also take into consideration that the reason for the for growth having gotten such a big bump was due to the fact that we saw imports basically fall off a cliff, and exports strong and imports falling off a cliff. And so the reason for that was that everyone was trying to beat the tariff deadline. That's all changed. We've had tariffs now in some countries of 25, 35%, the average around 15%. So growth in the third quarter is not likely to match what we saw in the second quarter. Again, it was a one-time situation. So as far as the markets are concerned, today we'll be looking at the PCE, and if it should come in hotter than expected, I would say the combination of higher inflation and the announcements over tariffs obviously could be quite negative for the market, and we can see the market continue to roll over until things simmer down, especially on the tariff front.
Oh, yeah, absolutely. In fact, let's take the conversation forward. Peter, thanks for your time. Good speaking with you.